Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to podcast episode 67, published on September 24th, titled Top Water, Environmental and Renewable Energy Investments, and presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investing news, commentary, information, and resources. Remember that you can find a full transcript, links to content, including stock symbols, quotes, and bonus material at this episode's podcast page located at investingforthesoul.com/podcasts. Now, just a reminder, I do not evaluate any of the stocks or funds mentioned in this podcast. Furthermore, if you're concerned about the ESG and sustainability ratings of any stock or fund included in this podcast, check your broker's online site for such information. If your broker doesn't have this information, sign up for free with Morningstar and you can gain access to company and fund ESG sustainability ratings. Please note, I received no compensation from Morningstar or anyone else covered in these podcasts. Also, if any terms are unfamiliar to you, simply Google them. With fires, drought conditions increasing around the globe, water investing is gaining prominence. This recent article titled Water Investing, 5 Funds You Should Tap by Corianne Hicks at Kiplinger offers insight into some leading water ETFs. Here are some quotes from her. Billions of people around the world will be unable to access safely managed household drinking water, sanitation, and hygiene services in 2030 unless the rate of progress quadruples, according to the World Health Organization and UNICEF. So here are quotes from each of the funds. 1. Courtesy of First Trust. First Trust Water ETF. Assets under management, $1.3 billion. Dividend yield, 0.4%. Expenses, 0.54%, or $54 annually for every $10,000 invested. The First Trust Water ETF tracks the ISE Clean Edge Water Index, which holds companies in the potable water and wastewater industry with worldwide market capitalizations of at least $100 million. MSCI's ESG Fund Ratings rates First Trust Water ETF at AA, the second best rating, and within the system's so-called leader tier. 2. Courtesy of Calvert Funds. Calvert Global Water Fund A shares. Assets under management, $590.7 million. Dividend yield, 0.6%. Expenses, 1.24%. The Calvert Global Water Fund A shares is a water investing mutual fund that seeks to track the Calvert Global Water Research Index, a proprietary index comprised of companies that manage water use in a sustainable manner and are actively engaged in expanding access to water, improving water quality, promoting the efficient use of water, or providing solutions that address other global water challenges. Note that this fund also receives MSCI's AA rating. In addition to a 1.24% expense ratio, investors also pay a 4.75% front-end sales load unless their brokerage waives or lessens the load. Fidelity and Schwab are examples of brokerages that will waive the load on this fund. 3. Courtesy of Invesco. Invesco Water Resources ETF. Assets under management $2.1 billion, dividend yield 0.3%, expenses 0.6%. Invesco's flagship water-themed fund, Invesco Water Resources ETF, was launched in 2005. This fund tracks the Nasdaq OMX US Water Index, which invests in companies that purify and conserve water for home, business, and industrial users. The Nasdaq OMX US Water Index was the best-performing Nasdaq index in July 2021, up 6%, says Renee Rayner, Head of Thematic and Specialty Product Strategy at Invesco. Invesco also offers a global version of this fund, the Invesco Global Water ETF. The Invesco Water Resources ETF earns 5 stars and a bronze badge from Morningstar. It also earns MSCI's highest ESG rating, AAA. Again, number 4, courtesy of Invesco, Invesco S&P Global Water Index ETF. Assets under management $1.2 billion, dividend yield 1.1%, expenses 0.57%. The Invesco S&P Global Water Index ETF could be considered a more traditional way of investing in water than the previous Invesco water funds. This ETF tracks the S&P Global Water Index, which focuses on the 50 largest companies in water-related businesses around the globe. This fund targets 2 distinct segments: water equipment and materials, and water utilities and infrastructure, allocating 25 stocks to each. The fund also earns 5 stars and a silver badge from Morningstar, as well as an AAA ESG rating from MSCI. 5. Courtesy of Fidelity. Fidelity Water Sustainability Fund. Assets under management $99.4 million. Dividend yield 0.1%. Expenses 1%. Launched in April 2020, the Fidelity Water Sustainability Fund invests at least 80% of its assets in water sustainability companies, such as those involved in water resources, treatment, or distribution. These can include the companies found in the S&P Global Water Index, but the managers also reserve the right to choose other companies they feel meet the fund's criteria. Of the 5 water investing options in this article, the Fidelity Water Sustainability Fund deserves the most scrutiny before jumping in, given its short track record. MSCI's ESG Fund Ratings rates the product at AA. End quotes. Looking for companies with strong SRI characteristics and good dividends? This article can help you. It's titled SRI, which companies have both a positive sustainable impact and a strong dividend. It's by George Sweeney. Note, the writer mentions ESG scores but doesn't indicate where they are from or their methodology. Here are some quotes from the article. This article was on Fool.com. Quotes, according to Daily FX, there are some stocks out there that are socially responsible and reward investors with a decent dividend. A win-win. Here are some of the top businesses ticking both these boxes. 1. Coca-Cola HBC AG. Although Coke is questionable from a health perspective, the company has a massive environmental, social and governance ESG score of 92. It also pays a respectable 2.19% dividend yield. 2. Hewlett Packard Enterprise. It has an ESG score of 91 and pays a tidy dividend yield of 2.92%. 3. Dexus Property Group. This is a less well-known brand because it's based in Australia, so you'll find it on the ASX 200. But the company is making waves down under with an ESG score of 89 and a super dividend yield of 5.18%. The company focuses on property and real estate. In 2020, it managed to successfully reduce its office emissions by 50.1%. Now, some other notable stocks that didn't take the top spots but still had strong ESG scores and dividend yields are Unilever, ESG score 89, yield 3.51%, Diageo, ESG 87, 2.12%, Stockland, ESG 86, 4.73%, Abbott Laboratories, ESG 86, 1.46%, Stanley Black & Decker, ESG 86, 1.34%. End quotes. Now back to great ESG funds with this article titled 4 ESG Funds Investments to Beat Rising Environmental Issues by Zacks Equity Research. Here are some quotes on each fund. 1. New Alternatives Fund Class A aims for long-term capital growth with income as its secondary objective. It primarily invests in common stocks of companies and even in other equity securities, such as real estate investment trusts and American depository receipts. This fund has 3 and 5 year returns of 29.1% and 18.9% respectively. The New Alternatives Fund Class A has a Zacks Mutual Fund rank number 1 and an annual expense ratio of 0.96% compared to the category average of 1.26%. 2 is the Parnassus Mid-Cap Growth Fund Investor. Aims for capital appreciation. The fund invests majority of its assets in mid-size growth companies. This fund has returned 18.7% and 16.4% for the 3 and 5 year periods respectively. The Parnassus Mid-Cap Growth Fund Investor carries a Zacks Mutual Fund rank number 1 and has an annual expense ratio of 0.83%, which is below the category average of 1.09%. 3 is the Janus Henderson Global Technology and Innovation Fund Class A. Aims for long-term growth of capital. The fund invests majority of its net assets in securities of companies benefiting from advances or improvements in technology. The fund's returns are 30.2% and 30.5% over the past 3 and 5 year period, respectively. This fund carries a Zacks mutual fund rank number 1 and has an annual expense ratio of 0.99% versus the category average of 1.05%. 4. Calvert Equity Fund Class A aims for growth of capital through investment in stocks believed to offer opportunities for potential capital appreciation. The fund invests majority of assets in common stocks of companies that rank among the top 1,000 U.S. listed companies. The fund has 3 and 5 year returns of 24.3% and 21.2% respectively. It has a Zacks mutual fund rank number 2 and an annual expense ratio of 0.94% compared to the category average of 0.99%. End quotes. Now, about 2 years ago, I covered the launch of the US Vegan ETF. Well, several articles have appeared on the success of this ETF. Quoting this article, Vegan ETF celebrates 2 years of outperformance by Beverly Chandler at etfexpress.com. She says, the world's first and only vegan ETF, the US Vegan Climate ETF, has reached its 2-year anniversary since launch, with almost US $65 million in assets since inception and having returned 67.91% versus the S&P 500 index's 57.07% on market price since inception to end of August 2021. End quote. This next article is titled 3 Climate Change Stocks to Consider Buying Now. It's by Beth McKenna and appeared on Fool.com. Here are some of Miss McKenna's quotes on each of her investments. 1. American Water Works. American Water Works remains the best choice in the water utility space for most investors, in my opinion. It's the largest and most geographically diverse publicly traded water and wastewater utility in the United States. That makes it best positioned to capitalize on the consolidation trend in the industry. 2. Pool Corp. As the world's largest wholesaler of swimming pool supplies, Pool Corp is best positioned to profit from rising demand for pools. The company has also shrewdly expanded into related outdoor living products, such as landscaping and irrigation products. Wall Street has been doing a poor job projecting Pool Corp's earnings growth. In the past 4 quarters, not only has Pool Corp beat the consensus earnings estimate in every quarter, but it has crushed it by an average of 63%. 3 is Generac. In the second quarter, Generac's shipments of home standby generators nearly doubled from the year-ago period, and the company is ideally positioned to continue to benefit from strong demand for backup generators because it's the largest player in this market. It's also a major player in the commercial and industrial standby generator space. Moreover, in recent years, the company has expanded into the clean energy market. It makes battery storage systems which can store energy from solar panels or the electric grid and related products. Wall Street analysts have been continuously underestimating Generac's earnings growth potential. End quotes. Now some honorable mentions. Now go to this podcast webpage for the links. 1. Title: 5 Wind Energy Stocks to Get Ahead of the Renewable Energy Movement by Pete Johnson on Investment New. 2. Title: 7 Best Energy Stocks to Buy to Cash In on the Alternative Energy Boom by Gill on Investor Place. 3. Title: These 3 renewable energy stocks should benefit from a new infrastructure bill by Travis Hoyam, Howard Smith, and Daniel Fulber from the Motley Fool. 4. Title: 11 Best Alternative Energy Stocks to Buy Right Now by Ramesh Chima on Yahoo Finance. 5. Title: Companies with Strong ESG Credentials by Vikram Bhatt, Morningstar.ca. Now, a welcome development in the US green bond market. From a press release, quote, Van Eck today announced the launch of the Van Eck HIP Sustainable Muni ETF, the first ETF designed to offer exposure to investment-grade municipal debt securities that focus on sustainability as well as positive social, environmental, and economic outcomes or mission accomplishment. End quote. Well, these are my top news stories with their stock and fund tips for this podcast, Top Water, Environmental, and Renewable Energy Investments. To get all the links, stock symbols, or to read the transcript of this podcast and more, go to investingforthesoul.com/podcasts and scroll down to this episode. Also, be sure to click the like and subscribe buttons in Apple Podcasts, Google Podcasts, or wherever you download or listen to this podcast. And please click the share buttons to share this podcast with your friends and family. Let's promote a better post-COVID world through ethical and sustainable investing. Contact me if you have any questions. Stay well and healthy and conscious about the ethical and sustainable values of your investments. Thank you for listening. Talk to you next on October 8th. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.